Did you know that AI tools such as ChatGPT and Claude can be used to do basic financial analysis and sometimes even retirement planning? You can. The issue, though, is a lot of people still aren't quite familiar with these tools and don't know how to leverage them so that they can provide effective answers and analysis. And so sometimes these tools can make mistakes and they'll give you bad advice. So today I'm going to walk through the basics of how to use AI tools for this specific purpose. And then next week, we'll dive into some advanced techniques. Let's go. In order to use AI tools effectively, we must first understand how they're built. AI tools such as Claude, Gemini, and ChatGPT are trained on massive amounts of data. This is how they can walk through different scenarios, help you do calculations, and then think through to help you make decisions. Think of it as having a financial analyst 24/7 at your beck and call. What AI is good for in terms of financial planning is the following. They can do complex financial calculations if you give them enough data to do this kind of analysis. They can explain financial concepts, very even complex ones, into simple English. It can help you think through trade offs and pros and cons. It can even help you make spreadsheets and walk you through how it performs the math. Finally, it can also help you think through different scenarios so that you can consider different retirement strategies. What AI is not good at, though, is predicting stock prices or returns, because no one can do that, even with all the historical data that we have today. It also can't replace a certified financial advisor or tax planner or fiduciary, especially if you have complex situations. It can't understand your personal emotions. It also cannot understand your risk tolerance. It cannot give you specific legal or tax advice. Finally, it cannot make decisions for you. It can only present you data to help you make a decision because your situation will be unique. The key is knowing where AI can and cannot help you. Now, there's a concept in AI that you do need to know, and this is called hallucinations. Hallucination is a situation where AI makes up stuff. The answer can sound very competent, confident, sounds accurate, the answers look detailed, but unfortunately, it's completely wrong. The AI engine isn't trying to lie to you. It just doesn't know that it doesn't know something. It can't see around corners or predict the future, like we mentioned. So it tries to fill in the gap where it sounds plausible. Some examples of AI hallucinations can include things like making up tax rates that doesn't exist, citing studies or statistics that aren't even real, being overconfident about the things it says, even though it probably shouldn't say, I'm not sure, or getting contribution limits or Social Security calculations wrong. There are ways to protect yourself from this. First, you can verify numbers for yourself. If AI tells you that the contribution limits for 401k is a certain number, double check it. If it gives you a Social Security claiming strategy, double check that and log into ssa.gov. You should always, always, always cross-reference critical information. Don't make decisions based solely on what AI tells you. Just like everything else, you need to do your own research and make the decision yourself. You can think of AI as really a smart intern or a smart helper and assistant. It's helpful for analysis and brainstorming, but it's no substitute for common sense. Okay, so now let's talk about how to use AI effectively. This concept is called prompt engineering. Prompt engineering is essentially a fancy way of saying framing how you ask your question so that AI has less tendency to hallucinate and give you a false answer. The more detailed and specific your prompt and the context, meaning the information that you feed it, then there's a higher chance that the answer it gives you is sound and reasonable. Here's the difference. For a bad example of a prompt would be something like, can I retire early? A better example would be to give it all the context that you could possibly give. For example, I'm 58 years old. I have about 500,000 saved up in my 401k and traditional IRA. I hope to collect my Social Security at age 62, at which time I'll collect $2,000 a month. I'm in pretty good health, and I think I can qualify for ACA subsidies. My current rate of return is 7%, and the current rate of inflation is 3%. Do you think it's reasonable for me to consider retiring at age 60? What do you think the chances are of me running out of money in a 30 or 40-year retirement? Do you see the difference in the way that question was framed? The second prompt gives the AI tool all the context that it needs to formulate a better answer for you. So there are several elements for a good financial prompt. These include your current age and your target retirement age, your total amount saved. These are all the monies that you plan to withdraw for expenses in retirement. Your expected withdrawal and expenses, all your other income sources, such as Social Security, pension, extra income from other jobs, and then your time horizon. How long do you need the money to last? When you ask AI to give you an analysis, also ask it to show you the calculation step by step, or ask it to show you the math behind its answer. This can help you catch errors and understand where the numbers come from. So, which AI tool should you use? There are many players in this space, but there's three that are probably the best ones for financial analysis in my own experience. This experience may be different for you. These are ChatGPT, which is created by OpenAI. The nice thing with ChatGPT is it's very conversational. It's very good at explaining things at a layman level. And the free version is fairly solid for simple analysis. The second one is Claude, made by Anthropic. This is actually what I use the most in my day to day and even in my job. What I've seen Claude do is it's great for detailed analysis and it can create interactive charts and calculators and spreadsheets. The third one is Gemini, which is made by Google. It's really good for research and pulling information from the internet. Finally, there's Perplexity. It's excellent for doing research and can cite the sources that it uses so you can verify information. So, which one's the best? I'll be honest, this is what I usually do. I usually will try to ask the same question on ChatGPT and on Claude and compare answers. And sometimes I'll even ask Claude to create a prompt for ChatGPT or vice versa. When their answers line up, then I feel a lot more confident in the accuracy of the answer, although I always double check what they give me. When these tools disagree, this tells me that you need to dig deeper or consult a professional. So there's free and paid versions of these AI tools. The free versions, surprisingly, are very capable tools, and they're enough for basic retirement planning. If you're curious at which AI tool performs best at different AI tasks, you should check out the Vellum AI leaderboard. It ranks models on their math, their reasoning, and other capabilities. For financial analysis, you want models that score high on reasoning and math. All right, so let me show you exactly how to use AI for a real retirement scenario analysis. Okay, so now I'm going to show you how to use a tool like Claude to do some retirement analysis. So first off, let's set this up. I'm going to say I'm currently 58 years old. Um, 1.8, and this of course is just fictitious, right? Because I'm not 58 years old and I don't have $1.8 million, say, but for the sake of an example, let's go through this. Would like to retire at age 60. I am hoping to get $3,000 monthly from Social Security starting at age 62, and will be getting a $2,000 a month pension from my current employer. This pension is available for me to use until death. Investments inside my 401k has a rate of return of around 7%, and I have a mix of 70% stocks, equities, and 30% bonds. I would like to know if I can safely retire at age 60. So, can you please help me with analyzing my retirement scenario? I would like for you to provide me a breakdown of how much I can safely withdraw year on year, if I can do Roth conversions, or should I? And if I need to reallocate my 401k or Roth into different asset allocations, for example, doing the bucket, 3 bucket scenario. All the calculations and math you use to derive this conclusion. And then, we try to give it as much information as possible. You notice I didn't give anything about tax. I didn't give anything about inflation, but maybe this is a good starting prompt, right? So let's see what it does. And so you can see that it's starting to work through it systematically. It's going to try to suggest some safe retirement withdrawal rates and potentially Roth conversions. And so, yeah, by age 60, it's trying to figure out like what the retirement account is going to grow into, and then what's the retirement income streams and when. And then the safe withdrawal rate, which it's currently saying it's 3.5%. So it sounds like I could potentially withdraw 6,011 a month from the portfolio, but then there's some guaranteed income from Social Security and the pension that reduces how much we actually need from the portfolio. So year by year breakdown, this is what it's saying and how the math works. And then phase two, so it'll give me like the balances. So it sounds like for someone of this portfolio, it's extremely healthy. They'll still have about roughly 2 million even at age 90. That's a very strong retirement position. And yes, then it gives you Roth conversions. So you can see that it has a lot of information in here, probably a lot more than I can figure out in a spreadsheet, right? So yeah, and then how to set up like a 3 bucket strategy. So 3 bucket strategy, which we can cover in a future episode, essentially means divvying up your money so you have some cash reserves, more conservative investments, and then more growth investments. Yeah, this actually is it's a pretty good analysis for what I gave it, right? And so yes, here you'll see that it has a disclaimer that it's not a financial advisor or CPA, so they're illustrated. But I think this does give us a good picture. If you have no idea of what your retirement readiness is like, I think these kinds of tools can give you some information to see where you are and where the gap is. So, okay. Okay, here's some key takeaways from today. First, you need to be very specific when you give AI your prompts, meaning you have to give it all the information and details that it needs to do analysis. Second, you have to verify important numbers. Don't just trust blindly everything that it gives you. Third, use multiple AI tools and cross check their answers against each other. This will give you better confidence on the questions that you ask in terms of the accuracy or completeness of the answer. Fourth, ask the AI to show you its work, show you the calculations that it did, and show you the math, and this will help you catch some errors. Fifth, don't share sensitive information. Remember, these tools are trained on data, and any data that you give it, you can assume that it will be used to train itself. So be careful not to share social security numbers or any private information. Six, use AI to explore scenarios. It's really good for what if questions, but it can't do predictions of the future. Seven, remember that AI is a tool and it's not a replacement for a professional. If you have a complex financial situation, you should always seek professional advice. Look, AI is not going to replace a financial advisor, but it can help you understand your situation better and the gaps that you have for your financial situation. So that's the foundation for using AI for financial planning. Now you know what it can do, how to ask it questions, what to watch out for, and how to leverage it for your own use. Next week, I'm going to show you a more advanced technique for AI to let it do role playing by giving it a persona to assume. Imagine getting a fiduciary or tax analyst perspective on your financial question. That's what we're covering in part 2 of this video. My challenge to you this week is try this, plug in your numbers, and see what AI tells you. And then come back next week ready for the more advanced techniques. Till then, thank you for watching, and we'll see you next time.